It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
It is your real estate breakfast right across Australia, talking all about your property news, funnily enough, and what is likely to affect us in this year. We're streaming from Cairns to the suburb of Woollahra in Sydney, and good morning to wherever in Australia or internationally you might be listening to us from. It is a Thursday morning. Tell you what, this week has rattled by pretty quickly. February the 12th. Property prices are lifting across most capital cities for this year, driven by stronger borrowing power, lower unemployment, and an ongoing housing shortage. Not much news in that, but beneath the national recovery, Canberra does stand out. It's no longer one market. It's two markets moving at very much different speeds. Let's right now go to Sydney and catch up with Nicola Powell for the first time this year. She is the Chief of Economics and Research at Domain. And first off, Nicola, how was the Christmas break, since this is the first time we're talking this year? Did you get some time to switch off from the numbers, the data, and the constant forecasting on property and just try and relax?
Look, I absolutely did. I had a detox away from all things to do with real estate and numbers. And I think you could have just found me every day at the beach, rock pooling with my two children. So it was spectacular, but certainly ready back on deck and thinking about the real estate year ahead.
Detoxing from the numbers. I like it. That's exactly what we have to do. Now, I mentioned Canberra. A lot of people won't realise this, but you spent over a decade in Canberra, so you know it very intimately. Just want to kick off. The Canberra's detached housing market is firmly back in the fast lane. House prices jumped at 3.6% in December quarter. That is lifting the median to 1.14 million. So talk to that and the fact that you were there for such a long period of time.
Lived there for over a decade, and actually only just we sold out of Canberra last year. So it is a market that I know very intimately. I mean, overall, Canberra is a smaller market, and one of the trends for Canberra is that we're seeing detached housing demand is recovering much faster than unit demand. And there is this two-speed market across Canberra where we have house prices rising, but unit prices are actually going backwards. But I think particularly for houses, we have seen them grow, as you mentioned, 3.6% over the last quarter of last year. And that's actually the strongest quarterly growth that we've seen for Canberra house prices in more than 2 years. And importantly, it's consistent growth. So we've seen house prices in Canberra now rise for 3 quarters in a row, which is the longest stretch of an increase that we've seen in 4 years. Because what we've seen in Canberra really did struggle to move into an established recovery. I think we can call it that it is in a recovery now. And there is only now 2.8% away from achieving a new record high. So this tells us this is consistent growth. It tells us that the market is in a well-established recovery, and given that only $33,000 now separates Canberra from a new record median house price, it does show that recovery is well underway.
That is the house market accelerating, but Canberra's unit market is stalling. Apartment prices fell 1.3% over the quarter, making it the only capital city to record a decline. And this is where we've got this clear two-speed market going on in Canberra.
It does, and I think that presents opportunities if you are a buyer looking towards the Canberra market. I think what we've seen is unit demand does remain softer, probably a little bit due to affordability sensitivity at that price point, but also choice. We know that Canberra over recent years has seen lots of high-rise developments occur. That in itself can help change a price point. But I think that supply of apartments and units has really helped to cap the rate of price growth. And you know, we're now seeing them fall over the quarter. It was a minor fall. It was only 1.3%. But as you mentioned, it was the only capital city to record a quarterly decline in unit prices. So it does show that Canberra is kind of bucking the trend nationally.
Let's go a little bit touristy here, since you were in Canberra for 14 years. Somebody thinking about moving into Canberra, what would be a couple of things that you really liked, switching off from real estate, detoxing and all of that? What was it, a couple of things about Canberra that you really liked, you loved, and possibly you miss now that you're not living there?
Oh, I think when you've lived there lived in a location for a long period of time, there's always elements that you do miss and remain that kind of core memory. And I think Canberra offers such great livability. I think particularly if you are raising children, I think the commutability around the city, just the space as well, the cycle paths, I think that work-life balance is fantastic and I think offers such a unique way of living for young families. I think when I compare it to what people are facing in terms of commute times in Sydney, it is poles apart. And it's why we see Canberra continue to kind of top the ratings in terms of one of the most livable cities in the world. It's really understandable because of the facilities that are on offer, the lifestyle that's on offer. I think the only downside is it is just that little bit too far from the coast.
So you have moved from Canberra to Sydney, and that's where we are headed off to right now, because it might sound unbelievable, but median apartment prices have fallen in 19 Sydney suburbs over the past 5 years. A lot of people will find that hard to believe, Nicola.
And some of these falls are double digits. And what that really illustrates is there is no one single unit market in Sydney or in any of our major capital cities. And for me, if you're a buyer out there, it really highlights that you really need to have a deep understanding of what is the suburb or the area that you're purchasing into, what's the pipeline for supply, because we know high levels of supply can change a price point, what's happening in that overall development space, not only just in residential, but also commercial, infrastructure. These can all affect price points, but also, what you're actually buying as well, because you can purchase in a suburb and actually the offering can be quite different just down the road. Like, for example, we know that heritage apartments have a tight following and buyers are willing to pay a premium for a heritage style apartment. And you tend to find that heritage apartments also are larger, they have higher ceilings. So I think it is all about knowing your market.
We are talking to Nicola Powell from Domain this morning. When we come back, we're going to talk about why the median prices are falling and some of the biggest declines, including Concord. So we're back after this.
Decode the property market with insider knowledge and insights to better navigate your real estate journey. It's the Real Estate Podcast, talking properties from 6 a.m. every day from every corner of the Australian real estate market.
And it is a Real Estate Thursday, talking real estate around Australia and looking and putting the blowtorch on Sydney at the moment. Some of the big declines just before the break that Nicola was talking about involves Concord, which recorded the sharpest fall with unit prices down 31.3% over 5 years. And I'll get you to also talk about Kirribilli, which has also dropped.
So we have seen some large falls in both those suburbs. And I think with Concord, it's a small market and that can often see volatility. So I think when you have got particularly, say, lower price transactions occurring, it can pull that median price down. I think we've probably seen a bit of a shift in sales mix, perhaps more modest kind of 1-2 bedroom units and apartments have sold relative to some higher end ones. I think, there's a different price point depending on where you are. Kirribilli is also an interesting suburb in terms of seeing that price point fall. The median unit price in Kirribilli sits at 1.3 million and, as you mentioned, is down 23% over a 5-year period. Yeah, we've seen some regulatory changes in terms of tenancy laws, which may have impacted investors. So these are things like ending no grounds evictions, rent caps. And what we might have seen in some of these pockets is some investors are actually selling out. And I think some of these markets do have a higher concentration of investor activity occurring, which can obviously impact supply levels, transactions, and therefore the price.
Yeah, and just on that note, since you're talking about the investors, the high-density suburbs with heavy development pipelines like Sydney Olympic Park, that has seen fresh stock continually reset prices. Investor-heavy suburbs such as Blacktown and Kirribilli, as you mentioned, have also felt that regulatory shift. So some talking points in there.
Absolutely. And I mean, Sydney Olympic Park is really that prime example of heavy area with lots of high rise and lots of supply and continuous supply. The median price in Sydney Olympic Park is $680,000. So much more affordable, not only to first home buyers, but also to investors. This is where if you're a buyer in the market, you need to take care in some of those suburbs that you're perhaps tracking, because what you see is if you see large waves of new apartment completions that coming to market, it means that there's more stock entering the market and perhaps even more stock at lower price points. And that can weigh down the overall median price. It almost resets new, often smaller units which sell first. You know, they may have a smaller footprint, or it might just be more one-bedroom apartments selling. That can weaken that overall median price.
Yeah, it's interesting because in the report you mentioned that Sydney's broader median is sitting above $840,000. Now, I think a lot of people might be surprised when you're talking just above the 840 mark, but it is the broader Sydney median, and there's a distinct difference between that and the CBD.
Absolutely there is. And I think, units that overflow of affordability, they're much more affordable, not only for first home buyers, but also for investors. And I think we have got buyers and investors pivoting towards units more so because they are an attainable option. And what's interesting is, we have got unit prices broadly across Sydney rising. When you look at the quarterly growth for units in Sydney, it's now sitting at its strongest in 2.5 years. We have actually got slightly stronger unit price growth compared to houses. I mean, they're both rising, but we've got slightly stronger unit price growth. What that means is units have outperformed houses over the most recent quarter. So I do think what we've got in Sydney is momentum is rotating. I think we've got unit prices are accelerating, but we've actually got momentum now slowing down for house prices. And I think that's affordability impacts. We've got a record high house price in Sydney, and it's sitting at an eye-watering $1.76 million.
Yeah, it's pretty eye-watering, all right. Now, I do want to get this out of you before we go. Last Tuesday, of course, we had the RBA that moved us up 25 basis points. Have you guys done some sort of an analysis on where we sit today and what the rest of the year might look like in terms of these rates?
The higher rate is obviously going to impact borrowing capacity, and I think it will impact buyer sentiment. I think what we're likely to see is that's going to continue to slow down the momentum across our housing markets. I wouldn't be surprised if we still see prices rise, because we'd still have an undersupply of housing, and that in itself is putting pressure on the housing market. I think, when you look at what the interbank cash rate futures is implying, so the yield curve, what that is predicting is we are expecting another rate hike to occur this year, sometime this year. But I think it's likely to be, probably mid-year, maybe into the second half of this year. I think it was pretty unanimous that we expected the RBA to hike the cash rate at its first meeting of 2026. But I do think that they'll now play it out for a bit of wait and see approach.
Let's keep the fingers crossed. I hope you are right. Second half of this year would be better than 2 rate rises in the first half. Nicola, great to catch up with you for the first time, even though you are missing Canberra. Thank you for all that wonderful information and enjoy your Thursday.
Thank you.
We connect you to the best real estate information across Australia. The Real Estate Podcast.